Good day, guys. Dr. FX here again. We're going to be doing a breakdown of the previous week based on the pairs I trade from gold, USGJPY, and GBPJPY. I can decide to not do one because it's going to take a lot of time, right? So, if you have learned SLK one way or the other, and you've also learned the doctor system, so you should all be able to understand these are the trades that passed you the previous week. You understand? These are the trades you should have capitalized on last week, right? So I'm going to be going in detail, and it's not supposed to take us a lot of time, right? So this is GBP USD, and we are going to be paying attention to the previous week. So we'll start from the weekly time frame. I'll pay attention to, okay, what did last week supposed to offer, or what did last week offer that we missed, right? Now, if you take a look at last week candle before this current week that ended, we are going to be looking at this week. We're going to be paying attention to where it is rejecting from. At the same time, we are going to be paying attention to this week, and we're going to be paying attention to where it is rejecting from. That is how you normally trade, right? Based on the weekly time frame. So paying attention to the upper week right here, we are looking at key levels like this from the left-hand side of the screen, key levels like this. But if you notice, this particular key level was not rejecting from anything. So this key level is just pulling back. So any drop that the market is going to drop here is a pullback. But this particular week is rejecting from here, this particular OCA right here. So we have an information that, okay, this one is rejecting from somewhere, and this upper week is rejecting from nothing. So now, automatically from this particular zone, we've already learned a lot of things in SLK in the doctor system. We know that, okay, after this candle close, the next week is supposed to pull back into this OCL. So we are going to perform a KLR, right? We have a procedure, or let's say we have a particular setup we do in this type of scenarios, right? So we're going to be doing what we call a KLR. We're going to be paying attention to the market pulling back to the nearest daily key level, and then before it push up to go toward the next daily target, the next weekly target, which is this. I'm sorry, I'm talking about the weekly, not the daily. So now we are paying attention to the market pulling back to this before the continuation. Now, since we know the market is going to pull back to this, we can have daily storylines pushing back the market until the market is deciding to continue the weekly storyline. And we are going to be targeting this for the weekly storyline. Am I correct? Yes. So now we go into the daily time frame. Now, going into the daily time frame, we notice that this is our weekly zone overlapping with the daily zone, making it high probability. But anything below the daily, right, we are going to be looking for structure. Remember, I used to tell you guys that once you have a weekly storyline, a daily breakout, then your structure should be in the H4, H1. Yes. And if you want to have a candlestick structure, that's when it can come from the daily. But when you have a daily storyline, there a 4-hour breakout, then your structure should come in the H1, M30, M45. These are where you're going to have the valid structures. So anything below the daily time frame, based on this continuation, we are going to be looking at the H4, H1 forward for structure. So now, when the week started, we were expecting the market to drop down all the way here. So what happened in the midweek? In the midweek, we have the market coming into this key level and reject. Now, once the market rejects from this key level, all of us are going to be interested in the H4 time frame. Now, what are we doing now? We are establishing a little bearish movement before the market come into what? Our continuation setup. Now, before we go deep into this daily rejection, I want us to understand something. Now, what I want us to understand is this overall structure on the H4 time frame based on this weekly key level is what? It's a continuation setup. They'll ask me how. Now, this is a structure type 3, why we have a breakout structure right here, we have an engineered liquidity right here, and we have an overlapping imbalance. So this is now the normal trade you are supposed to take, right? This is your trade for the entire week based on the weekly time frame. Now, but based on the daily time frame, when you are selling, meaning you should be paying attention to this. This is a weekly KLR for you to pay attention to. At the same time, the sell inside here should not pass you by. How? We have a daily reject daily. This is where the daily rejected, and we have a H4 breakout. Now, once the H4 breakout right here, we are going to be paying attention to the QM and the apex, and we have multiple QMs we are paying attention to. Now, this is a QM, remember, and this is also what? A QM, and this is also what? An apex. Now, we'll go to the H1 time frame, and we'll look for the one that is what? Capable right here. So, we'll go to the H1 time frame. We'll look at what happened towards the sales. Now, before we even get to that particular zone, we have a H1 breakout right here. And immediately after the H1 breakout, we're paying attention to the QM2. So I'll delete this one for the H4 because the market did not even come back and the market has already used that zone already. So we are not interested. So we're now going to be paying attention to this QM, which the market came back into and used. So now this should have been a first sell for you. Now, after that first sell, remember you are selling down until I'm coming. You are selling down until the market comes into this zone because this is now where you want your buy to start from. Right. So now you are interested in looking out for sales. Understand? You are now interested in looking out for sales. Now you take a sell here with proper stop loss placement because if you refine, you are going to miss this sell because I missed the sell, if you guys remember. Now the same thing right here, you have a 14B. H1 rejected H1. H1 give you what? H1 gave you an engulfing sell candle. It led to an external breakout. Not this, sometimes I don't want to see this small breakout. I want to see an external breakout, meaning the market broke them. Sorry, the market broke an external structure like this, right? Then the market came back, generated liquidity for that zone, making it make sense. You understand? Making it look like a valid structure. Then the sell is going to come from here. This is now a continuation setup. So you have one sell and two sell on GBP USD intra based on the week, based on the daily storyline. The market gave you one sell. Can you see that? The sniper entry based on the QM. What happened? Daily rejected daily, 1 hour breakout, 1 hour QM. Correct. Liquidity is right here. Correct. Now, market give you H1 reject H1. H1 lead to an external breakout. H1 new apex is an engulfing sell with liquidity. Correct. Two sells. Can you see that? Just paying attention to just one particular pair. Now, after this particular sell, then the original buy for the entire week is now going to start from this particular zone. Then the buy starts. You are continuing your weekly time frame. Now, this is how you can do it when you understand price action, when you understand the entire SLK and the doctor system. Very simple. There are moves that you must have lost inside here, which is accurate. There are moves that will definitely lead to loss inside here. You might think this is the entry and you take a loss, but at least if the move you took inside this place, you took some losses. You understand? The moves that are valid are going to cover up for those losses. Meaning if you take two losses here, which is minus 2%, this is a 5R, this is a 5R, this is more than a 5R, at least 15R, they will cover for that two losses. Do you understand? I'm always trying to be realistic to make sure that you understand there are losses. So this is sell valid, and a buy very valid. These two sells are based on the what? The daily time frame, and the buy is based on the weekly KLR. Now let's go into gold, and then I think I'll just stop at gold. I wouldn't make too much noise. So based on gold, if you notice, we'll go into the daily time frame first. Now on the daily time frame, we'll pay attention to what the market gave to us and the reason why I started talking about the sell and what happened yesterday and why did the buy set in. I think my student knows why the buy started and whatever it is that happened. Now, if you look at the left-hand side of the screen, you notice that there was a daily rejection based on the doctor system. Daily rejected daily right here, and what daily gave us a breakout. So immediately you have this ideology, you notice that, okay, now the market is bearish. Now, the only two fresh daily key levels you have are this QM and what? This OCL. So these are the only two fresh key levels that the market can use for a sell after this green candle dropped down and broke out. So the next day, the market pulled back into this zone. But then let's talk about our target. Our target here can come inside this week, which is correct. But then let's pay attention to the low-hanging fruit, which is our first option. This is our first option, right? So now we have a daily rejected daily lead to an external breakout, and we have only two fresh key levels that daily can come back to, which is this QM and this OCL. Market drop into the daily OCL, then we drop into the H4 or the H1. Anyone is okay, depending on, like I said, for you to really understand, you need to understand the doctor system, or you need to have paid attention to some of my pre-video, right? Now, this is where the market now rejected the daily QM. Can you see that? Now, after rejection of the daily QM, what happened? The market gave us a 1 hour breakout. A 1 hour breakout. Then we are bearish. After us being bearish, what happened inside this zone? This is now where we are interested. Now, market gave us a sweep and a break. We are now paying attention to the QM, but the QM has been mitigated. The only fresh zone we have right here is the apex. Now, this is the apex we are now going to be looking for sells. But then, at the same time, market now gave me a model 5, which is part of the entry models we trade. And that is where I took myself, posted it on X, posted it everywhere. That is where I took the sell, right? Market gave a model 5. I was now not expecting the market to come here. And this is where the first sell is going to come. Now, after this first sell, market gave an opportunity at night. But I'm not interested in this kind of setup. But here is a break of structure. Here's a structural liquidity. And here is now what the entry for that sell, which I did not take and I'm not interested. I'm talking about last week price action because all this entire price action is idea. We are bearish until the market takes out what this low. But on Friday, for some certain reason, we become bullish. We are opportune to take a buy for Friday. And based on what one of my concepts we are going to see. Now we have a first sell right here. And then what happened again? When the market continued dropping down, gave another sell, which I did not take. Remember. Now, the next day open, when the next day opened, I had a sell around, was it here? But the market come and took me out, which was very cool. But remember, when you have a daily bearish storyline, remember, all H4 bearish key levels are supposed to be used for sells. And the market is going to be selective of the one to choose. It's going to skip some and use some. But if you understand structure, the market is going to give you the right one. Do you understand? Now, I took a loss here. This is where the line is. But the market come all the way up. I have an engulfing sell candle here. Remember, this is a model 4 right here. The one I told you I missed. Can you see that? It was a very beautiful model 4. This candle was used as liquidity. Market dropped down into it and sell. But I was already on a sell based on this upper model 4. Can you see that? That was the model 4 overlapping with that model 5. That makes a lot of sense for me to sell. Then the market gave another model 4, use it to sell. And I took a loss based on this model 4 inside here. But again, regardless, market came back, use this high as liquidity. This is now a candlestick structure. Sweep this high, break structure. This FVG gave you a candlestick structure. Market pull back into the engulfing sell. Now, I was being selective. Why I've already taken a loss inside here. So I was thinking of, okay, how do I make sure that this market is selling? Because the market did not close above this high, meaning we are still bearish. The market came, tap on this. After tapping, I go into the H1 time frame. Dropping into the H1 time frame, some of my students were aggressively selling based on the refinement here. Can you see that? Based on the QM and the refinement, which is very okay. I can see them selling already. They were okay, but now me, I use a 14B inside here to take the sell. Why? Well, have a H1 reject H1. H1 lead to an external breakout of an apex, and the market gave us a new engulfing sell candle, and then the sell came in from here. Can you see that? That's how the sell came in. Now, the market started dropping down aggressively. It gave a very wonderful drop. Now, let me show you. It gave a very wonderful drop all the way down right here. But the market come back, and immediately the market was coming back, I took another sell right here, the one I used to pass that account. I took another sell right here, which is a model 5. How and why? Because when I drop to the 15 minutes time frame, it is a structure type 3 for me. You understand? It was a structure. Can you see that? This imbalance right here, this imbalance right here, this low as liquidity, and what? Everything just makes sense, which is a structure overlapping with a model 4. So this sell makes a lot of sense. I then use this sell to continue to the downside until the market take out what? This external liquidity. So I'm talking about the trades I took. The first sell here, which is a winner. This sell, I was sleeping, I did not take. This one, I took a loss off of the zone. Market came into this zone, took advantage of a sell again, took advantage of another sell here. And then the one that occurred here also, I took it, but I took it very late. I also used it to pass another account, which I also sent to you guys. But then on Friday, something different happened. Now let's come into the daily time frame. Let's come into the daily time frame. As far as you are my student, you're not supposed to take a loss, or as far as you've understood something, or you've understood SLK one way or the other, you should know that this Friday is going to buy. Now, how and why? Now, when Friday opened, the first thing that the market did was a shadow reject. Once we have this shadow reject, we should be looking for buy. And you know where shadow reject is likely going to end. Market is supposed to take this previous daily high. But then let's say we are not interested in that. We want the market to just trade to the nearest daily key level, which is the I'm not paying attention to RBS because you know our RBS is not too strong except for entries and whatever it is. So we are going to be looking for buy until the market comes to this zone or this. So we're going to the 1 hour time frame quickly, which is what I've done. And you should have capitalized on Friday buys. Friday, I was just in a trade on UJ. That was why I did not capitalize on this buy. So immediately after the shadow reject, the sweep, where do you want to see the breakout here? The market breaks out. Immediately after the breakout, we are now interested in buying. Now go to the 4 hour time frame. Let me show you something. Now I'll go to Owanda. You know, one thing about me is I've already know how to blend both of them together. Once you go into Owanda, market gave a 1 hour break. After the 1 hour break, look at the model 4. Go to my page if you don't understand model 4. Look at the model 4 that played that way. 1, 2. Look at the OCL here. Boom. Now look, go into the 15 minutes time frame. Just go into the 15 minutes time frame and see what happened. On the 15 minutes time frame, what is this? A continuation setup. What is this? A break of structure. What is this? The liquidity. And this the entry. Can you see that? Make a lot of sense. Did you see? Shadow reject model 4. Boom. Simple. Shadow reject H1 breakout model 4. Boom. Very, very simple. One of my students took it, which I'm very proud of. I think this guy started learning from my lifetime mentorship, and the guy is doing so well now. The guy took it. I think I sent it to the Telegram channel, right? So that is how the buy came in. Did you see that? Then you should be interested in buying until that daily key level. And once the market hit that daily key level, which is this one, you are not interested anymore. Let's go back into the 15 minutes. You are not interested what anymore, right? Market pull back all the way, hit the zone. You are done. You don't want the buy anymore. But at least for you to be able to establish direction anytime, look for the breakout anytime, and sort out for the entries. Okay, for me